E-mini playbook, October the 23rd, 2023, 7-minute recap. Let's take a detailed look at the activity of the market today. And we will start where we normally start, which is the daily chart. Going back to the early part of this year, coming out of this uptrend, going into congestion. June going into a major uptrend which peaked in August, and we see this zone developing here. And as a result, we are going into a downward trend here. Algorithm giving us sideways motion here, so we're getting a bit of congestion, a continuation of this downward trend starting in September. A pullback, which we could classify as a trend pause, um, going into October, mid-October, and where we stand as of today, going into a potential trend continuation. Now, the question with this trend continuation is that we are bumping our heads up against a major zone which was established way back here in May. So that presents a problem with this downward trend. The question becomes, are we going to bounce off of it and go into trend reversal and head back up to this area? Or are we going to break through this zone? So going into today's activity, we are looking for short trades. However, we are erring on the side of caution, taking into consideration this zone that we are bumping up against. So a day like today is one in which the daily tools that we use come into play to let us know exactly what's going on. And so, looking at the tools of the day to see what our sentiment was, who was in control, the bulls or the bears, what was the primary opening, and then what was the continuation throughout the day. Taking a step back, we established the daily trend here. We are looking at a synergy consisting of four charts here. The 3-minute, the double of the 3-minute is the 6-minute. The double of the 6-minute is the 12-minute. And this final chart here is the 60-minute, which is giving us a good overview. We have another algorithm that we also use, which gives us an idea of the big picture in terms of the other markets. So this particular algorithm takes 6 markets, divides them into each other to see how they are moving. Are they moving in correlation? Are they moving in sync? Or are they going in opposite directions? Very important to know. So this is represented by the E-mini in red. We have the NASDAQ in green. We have the Russell in purple. We have the YM in turquoise. We have the gold market in yellow. And we also have the oil market in white. So very important to look at. We want to consider what all of these other markets are doing. Even though we're only trading the E-mini S&P, we want to know what the other markets are accomplishing because they do tend to run in sync and in correlation majority of the time. So the market open today, 9:30. We are seeing a upward trend on the E-mini. How does that play out when we are looking at our intraday charts? We can see the actual details on the 12-minute. We're starting at 9:30. We're taking this little dip down right here, and then we're going up primarily. Now, here's the very interesting thing. We have another tool that we rely on, the advanced decline line. So what was the advanced decline line doing at the market open? 9:30. We have this little trickle down. An interesting thing to consider today is that the advanced decline line started in a negative territory. I generally suggest that anything below 1,000 is something to consider in terms of establishing that the bears are in control. However, it is also important to know, given the zone that we are up against on the daily, that even though the advanced decline line is starting in the negative, it's a good idea to put the brakes on to get more confirmation that the bears are in control. And so what played out this morning is that even though it started negative, as we were watching the activity of the day, we saw the advanced decline line trickling upward. Again, the advanced decline line is letting us know how many stocks are advancing versus declining, how many are going higher versus going lower. So starting around 9:45, we get this trickle upwards, letting us know that this downward trend on the daily is going to have some resistance because the majority of the stocks are going upward. And we see the advanced decline line going upward for the remainder of the morning session. Very important to note because as we established, we're looking for short trades. However, if the advanced decline line is giving us indication that there is some upward activity, if it's letting us know that the bulls have some strength, we want to wait until that strength on the bullish side runs out. And we see it run out when the morning US or the morning London session ends at 12 o'clock. So we see this upward trend and then we see this downward trend here. We argued in our trading room that the time to go short was not here. The time to go short was when we were able to see this downward activity confirming that the bears were back in control, which was consistent with the daily chart. We get so much fun in talking about these days, and especially a day like today, which was very complicated in terms of the opening being low, the activity going up, but the daily trend going down. So, an extra 30 seconds for today's wrap up. Let's look at another monitor that we observe in the trading room. This monitor basically is 6 charts, 1, 2, 3, 4, 5, 6, and these 6 charts are mirrored here. These 6 are the daily, and these 6 are giving us the 3 minute. So these help when there is activity that is not running consistent with what the daily trend is. It gives us the same overview that we are looking at when we're looking at this, but it's also giving us the actual pricing activity. Again, the playbook, we go into more detail about the specific algorithms that we use, these crash barriers, um, these supply and demand zones, these heat zones. We cover these items and we allow these to give us safety during the intraday trades. And a good example of that is for the E-mini today. This daily chart stayed red for the entire day, letting us know that the upward movement that we saw earlier in the day, the 3 minute showing it here, and yes, I have trades up, no profits, so you know, the 3 minute is showing us this upward activity in the morning, starting at 9:30. Letting us know that there was some bullish activity. However, once the session ended at 12, we get into the activity that lets us know that the dominant trend, which is the daily trend, is back in effect. So we were able to go short here for a small, what is that, 11 points, 9 points, my mistake, and take advantage of this move, which is a more let's say a higher probability move than if we would have took the short at the opening back here. Again, these tools let us know what the indicators of who is in control are. It gives us more confirmation. There is the tendency or the temptation to observe a daily trend and to see it going downward and to just hop in short the first opportunity we get, but that over time plays out and becomes a very low probability scenario because there are other activities going on during the day. So these are the tools that we use. These are the things that keep us safe. These are the things that cause the probabilities of success to increase. Hope everyone was on the right side of the move today. We look forward to tomorrow's activity, going back into this potential trend on the daily to see how it will continue, how it will break through this zone here, and to get an indication from our tools of whether or not it will actually continue in the downward direction. Have a great evening. Look forward to corresponding with everyone tomorrow.